Welcome to Paladin Financial Talk. I'm your host, Jeff Quick, and I'm joined here today by my esteemed co-host, Mr. Tony Shore. Tony, what's shaking today?
Jeff Quick, this is quite an honor to have you once again on the show. You're hosting this week. I think it was going to be Matt Bryant.
It was.
Matt couldn't make it today, and look at you filling in. I love
the
that.
show has gotten too big for Matt, apparently.
I think, yeah, it has. The show has gotten too big for Matt. We left him behind, but it's good to have you here, Jeff, and I'm excited about the topic you have. I know we've been going over these financial pillars, is it? The
Yes.
3 pillars of financial planning, because October is
financial planning month. And now we do have 4 pillars, Tony, but we've covered the 4th one quite extensively over the last few shows with the healthcare and long-term care. So now we're going to focus on the other 3, which are, of course, are financial planning, tax planning, and estate planning.
all right. Okay.
And how fiduciaries are involved or not involved in each of those 3 areas.
Hold up. You used a really big word there, fiduciary. That it may sound like a bad word, but it's the best word, right?
It is.
Oh, what does fiduciary mean?
So fiduciary is somebody that's morally and legally obligated to do what's in the client's best interest, not their own, in its simple terms.
Okay. So you're obligated and held to a standard where you have to make the decisions that are best for your clients, not necessarily best for you personally or your business or other factors, but what's best for their personal situation to meet their goals. And I think that's huge. There are a lot of so-called financial planners out there, right?
Yes.
Who might just be a broker or an insurance salesman. But you want somebody who actually is a registered investment advisor and is a fiduciary who has that responsibility. And you're audited. They look at all the things you do for your clients. They give you checkups, and your business is audited to make sure that you're doing that. I mean, you would do that anyway, Jeff, because I know you and Jeff Foley and Matt and Ellie. That's the people you are anyway, but you are fiduciary. So that's a big question that I think people should ask of are you a fiduciary is a big question. And the answer needs to be yes, right?
Hopefully.
Yeah.
And you mentioned a couple of others. There are a lot of people doing financial workshops or representing themselves as a financial advisor. The term advisor or the word advisor should only be used by somebody that actually is a financial advisor. In this case, it's an investment advisor representative or an IR or somebody that owns a registered investment advisory firm are held to that fiduciary standard.
Yeah, that's really, really important. So I think that that's good. And so, like we said, fiduciaries can't just make decisions that are in their best interest. They need to act in the best interest of their clients, right? So I think that's really good.
Yeah, and you mentioned a couple of others, and people get confused, right? Insurance agents will sometimes hold themselves out as a financial advisor because they're using products that sometimes are seen as financial products, when in reality they're insurance products, and there's a difference. Insurance agents are held to what's known as a suitability standard, not a fiduciary standard, so a lower standard.
Okay.
Same as registered reps who work for broker dealers. They're paid differently as our insurance agents. They're paid on a commission basis, right? Not a fee basis. So they're paid by typically the mutual fund company they're representing or the insurance company they're representing at the time. Nothing wrong with that. It's just different. And we like to make sure that people know the difference between the different standards that people may be held to.
Yeah. Yeah. And I think that's a pretty big deal. I mean, you have an analogy for that, right?
I do, and I use a simple one. I talk about if you walked into a car dealership. Now, we know car salespeople are not fiduciaries, but if you walked into a car dealership looking to purchase a new vehicle and that person was not a fiduciary, let's say they're held to a suitability standard, they could sell you any car on the lot, right? They could sell you a little convertible sports car, SUV, minivan. They're all suitable, right? But now, as a fiduciary, one of the requirements would be to learn more or know your customer, right? Find out about you, your lifestyle. What are you going to use the vehicle for? If you have a family, 3 children, a dog, you like to travel, you go on vacation together, you camp, a two-seater convertible sports car, it might be suitable, but it's not in your best interest or the best vehicle for you. So a
Yeah.
fiduciary would ask
Good
you all
point.
those questions, right? And make sure it's the best thing that they have available for you and your specific situation.
Right. Right. And with fiduciaries, Jeff, transparency plays a role in this too, right?
Transparency does play a role. So you should always know how you're being charged, right? What types of fees you're paying. In the case of fiduciary, you're paying based on the amount of assets maybe they manage. You could pay a planning fee. It could be an hourly fee or an annual fee. There's different ways you can be charged, but it should be very clear. And for me and all the advisors at Paladin, unless our clients can tell us how they're compensating us for our services, we don't feel we've done a good job in acting in fiduciary capacity. We want them to be able to explain back to us the fees that they're paying in this case.
Right, right. And you're fee based. So when they do better, you do better. And if the market's stagnant or a down year, you don't make as much either. So
Correct.
it's not like you keep a flat amount. You really, I think it's great, and you're very transparent at Paladin about how you are paid. A lot of people question that, like, okay, so you're meeting with me, you're not charging me for this meeting. No, you don't charge. You run reports. You don't charge them for those reports. So how do you make money? That sounds incredible. You'll do a financial plan with me and meet with me, and I'm not getting a bill. Well, it's if you want to work with your firm, your clients pay a fee.
Correct.
Of the money you manage for them.
Yeah, so it puts us really on the same side of the table. I want you to
Right.
do well and make more money, right? There's another investment company out there that has a lot of commercials that says we do better when you do better.
Yeah.
What they're really saying is they're a fiduciary and
Yeah.
they're compensated based on the amount of assets they manage, just like we are. So we're again on the same side of the table, and we do better when you do better.
Sure. I think that's great. So you got to be clear about that. So what are some of the duties that fiduciaries have to your clients?
Yeah, I mean, one, we talked about transparency, right?
Yeah.
Knowing your client and their situation, so that gives us the ability to do what's in their best interest, and just always honoring that and thinking of the client first when we're making recommendations to them, for them, and about their financial situation.
Okay. So what if a fiduciary breaches their duty, Jeff?
Yeah, good question. Well, there are rules and regulations out there. We actually just went through an SEC audit, right?
Yep.
That's one of the things that takes place. They monitor our business. They look through our client files, make sure we're doing our due diligence. We're making decisions based on the client's best interest, not our own. So they do that on a regular basis. And if we're not held to that, we could have legal ramifications. We could get fined, suspended from working, things of that nature. So it's in our best interest in another way as well to make sure we're following up and meeting that fiduciary standard.
Yeah. Yeah. The SEC comes in, audits you, looks at what you've done for your clients, where you're putting their money, and what third-party managers you use. And that's how you guys are great. But that's how you really look out for. The reason they have this is so you don't get people like you hear about these Ponzi schemes where people get hey, give me your money and I'll get you this return.
Correct.
Well, you got to be careful.
Absolutely.
You want to make sure you're giving your money to a third party.
Yep.
Like I think you guys use Charles Schwab.
Yes,
right?
correct. So Charles Schwab, that's the custodian, right? They custody the assets. There's only a handful of custodians out there.
Yeah.
Charles Schwab is a big one, right? There's National Financial Services,
Sure.
Pershing, and a few others that
Sure.
really hold the assets, ensuring that we can't do anything with those funds.
Yeah.
That's not
you
first given to
don't
the
even have
customer.
access to the funds. It's a third party.
Correct.
Money manager.
That's correct.
I think that's really, really good. Now, what about fees? You mentioned fees earlier. You're transparent about your fees because you're fiduciaries and are held to these standards. Are your fees going to be higher?
Not necessarily. It depends. Fees are a part of it. The big part is the transparency. So a client can make an educated decision on not only does the plan, do the investments make sense, Are they best for me? Is this more or less expensive than maybe where I was previously? So we also have to file a report that gives the client a comparison of fees. So example would be a 401k plan. Typically fees are low.
Yeah.
Sometimes it's more expensive to have an outside party manage those. So we need to let the clients know that, hey, your fees may be increasing, but here's a list of services and things we offer that hopefully more than make up for the additional fees or cost of the service.
Well, sure. I mean, there's a huge advantage because if you just have your money in a 401k plan, typically those plans aren't as actively managed. They don't have as many options. They're not as customizable. And if it goes through you, I know you could pick up the phone or even walk to the building and talk to the president of the investment firm you're using or the senior portfolio manager.
Yeah.
If you wanted to. Your clients' funds are in these portfolios, and you could pick up the phone and call the senior portfolio manager. And not a lot of financial professionals can say that they can just, pick up the phone and get a hold of, if you have questions about where you're at or how your money's allocated, and they want to know that, you can talk to the senior portfolio manager who's on a daily basis, actively managing those funds.
Absolutely. The people managing them, we can question them on why they made decisions maybe to go from one fund to another, to go from a shorter to a longer term duration bond. A lot of things we can find out and ask them, as well as our access to information prior to them making changes in the portfolio. We can inquire about what's going on in the financial industry with the economy that could make moving or changing portfolios or investment philosophy a benefit for those clients.
Okay. So let's clarify more about what a fiduciary is and what it isn't. As a fiduciary, does that mean you also do tax preparation?
It doesn't mean we do tax preparation, and we're not, licensed tax preparers. We're
You're
not
not a
CPAs.
CPA.
Nope, we're not enrolled agents.
Okay.
But the topic is interesting because not all tax preparers are fiduciaries. Okay. So if you're working with, one of the big tax preparation firms out there,
Sure.
and you're meeting with somebody, it's good to ask what their credentials are. Now, a tax preparer, they're obligated to follow the tax code, right? Enter verified information into the tax return and do the best job they can to make sure everything's prepared and accurate. In context, an enrolled agent or a CPA, they are fiduciaries. So they have to do what's in your best interest, not theirs. They're also authorized to represent clients in front of the IRS if it were to get to that point.
Right. And an enrolled agent or a CPA, I know that you work closely with those. And even if you have a tax preparer, it's good to have a financial advisor who's a fiduciary who can look at the big picture. Because I know when I've had my taxes done, the tax preparer just looks back at the last year.
Correct.
And he will make recommendations to say, hey, if you did this, we could lower your tax bill this year.
Yeah.
We want to lower your taxable income. And that's a great thing. But they aren't actively looking at what's going to happen if you make that decision now to when you hit retirement and you're taking money out of accounts. What about the tax implications?
Right.
What about the tax implications of Social Security when I'm retired? So you need a fiduciary, a financial professional, in my opinion, to do that. I wouldn't want to go it alone. I wouldn't want to just use a tax preparer or, fill it out yourself. You can fill it out yourself, fill in the form. You can use one of these little places that pops up, in a store to prepare your taxes.
Yep.
There's nothing wrong with that, but make sure you're working with a financial professional regarding your investments, regarding your money, because you could make costly mistakes.
You could. And it's all really in the name, Tony, tax preparer. They're preparing your income taxes.
Yes.
An enrolled agent and a CPA are more often than not going to look out into the future and make recommendations. Not that a tax preparer is not, but they're not required to. It's really, they're obligated to prepare the tax return accurately.
Yeah.
Right.
Yeah.
So that's the big difference.
Yeah, that makes sense. What about estate planning? saying you're a fiduciary, does that mean you're also an estate planner?
It does not. Now, any estate planner that's also a licensed practicing attorney, attorneys are fiduciaries.
Sure.
And they're most often the ones that are, whether or not they're preparing each individual estate planning document, may or may not be, but at the end of the day, that estate planning attorney is going to be responsible for that as a fiduciary and put their stamp of approval on that estate plan and say, hey, I did this for the client based on all of the information they shared with me, knowing my customer, and I made these recommendations to the best of my ability to make sure they benefit the client, not me as an estate planning attorney. I'm not going to do a bunch of work that's not required, because that wouldn't be in your best interest to have you file a certain type of estate plan or trust document that you don't need.
Plus, you don't have a law degree, you're a financial planner. So the way you help is, but you do look at, for all your clients, their enhanced planning needs and look at their estate planning and say, hey, what are your goals here?
Yes.
Do you want to leave this money? And you do make recommendations and work alongside estate planning attorneys to help them.
100%. I mean, through proxy, right? We have to be knowledgeable, and we should be knowledgeable about taxes. We should have some knowledge with regards to estate planning. We can suggest ways we believe they might be able to improve their estate or their tax situation. And then at Paladin, one of the things we do, number one, we're all fiduciaries. To anybody we refer our clients to on the tax or the estate side is also a fiduciary. That should make our clients feel comfortable knowing they're doing what's in their best interest, and also us as the advisor and the referrer, making sure the people we're referring to, we can trust to do what's in the client's best interest as well.
Yeah. And I know you work with various people out there. I've worked with some of them, and that's great. So to wrap this up, I think we've covered a lot. Why is it important for our listeners out there to understand what a fiduciary is?
Yeah, you should always know who you're working with, right? What their obligations are to you as the client or the customer to make sure they're doing what's in your best interest, not just because they say they will, but because they're held and they have a legal obligation as well as a moral obligation to make sure they are doing what's in the client's best interest.
Yeah, and you're held to that standard and audited by the SEC. And they go through. I know you have to save all your emails, your correspondence. They can look at your texts. What have you been telling your clients, and what are you saying to them and telling them to do? What investments are you recommending, and what's that based on? So it is such a relief. It lets you sleep well at night knowing that your finances and your retirement savings, your investments are being handled by a fiduciary who's looking out for your best interest. That's
100%.
That's a big relief.
And Tony, I mean, based on your breadth of knowledge here, have you ever considered becoming a financial advisor yourself? You're very knowledgeable.
You know what? I haven't. I was told there would be no math.
Okay,
Jeff.
fair enough.
I have you for that. I have the two Jeffs, Jeff Quick and Jeff Foley. I don't need to worry about any of that myself. No, I haven't. But yeah, doing these shows with you guys each and every week, I've learned so much. It's really helped me. I will say that.
Yeah, absolutely.
So, yeah, it lets me know what I should be looking out for when I talk to you guys. Like, hey, what's going on with this or that?
Yes.
So that's very helpful.
Yeah, and one more thing, if clients or prospective clients are looking at financial advisors, tax preparers, estate planners, there are websites they can go to, places they can go to do research. For anybody on the financial services side, they can go to BrokerCheck, FINRA-BrokerCheck.com, type in the advisor's name and location, and that will pull up whether or not they're a fiduciary based on their licensure, as well as show you their history, if they've ever been sued or reprimanded or had any action taken against them.
Sure.
That's all available out there for them as well. And I'd recommend everybody do that when you're looking at something as substantial as your financial future.
Yeah, and that's the FINRA BrokerCheck website, and FINRA is FINRA. Well, Jeff, great show today. Great topic. A fiduciary. I'm sure a lot of our listeners have heard the term, but just maybe didn't know the depth or breadth of what it includes or entails, what it means, why it's so important.
Yes.
So, listeners, thanks for tuning in. Before we go, though, Jeff, you need to let our listeners know how they can get a hold of you if they want to get a plan in place or talk to a fiduciary like yourself.
Absolutely. Well, they can call us at 651-842-8406, or they can visit us on the internet as well at www.paladinfinancial.com.
All right. Thanks, Jeff. Listeners and viewers out there, thanks for tuning in. And thanks, Jeff Quick, for hosting today. Another great episode of Paladin Financial Talk.